Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Thomas Parilla, president of Parilla Investment Group. Welcome back, sir.
Hi, good afternoon.
So, Thomas, Jerome Powell has raised rates again this week. The interest rate has been raised about 0.25 basis points, and now we're hearing that the UK has raised rates the highest since a very long time. What's Powell's master plan? What do you think he's doing?
He's walking a tightrope. He's trying to raise rates to slow the economy, but the problem is, he wants to slow the economy to slow the rate of inflation. But the problem that he has is the rate of inflation short term was caused by breaking the supply chain.
Right.
Yeah, I know last time we spoke, there was a little confused, I think, by some people as my statements about inflation. There are two types of inflation: short-term inflation, which in this case was caused by breaking the supply chain, and long-term inflation caused by overprinting by the Federal Reserve. We're heading for that train wreck down the road.
Right.
We've been eroding the quality of the dollar since we went to a fiat dollar. But short term, it was the supply chain. I mean, we had a supply sitting off the West Coast stacked up, and we couldn't get it off and into the stores. You went to Walmart, and you found places where the shelves were empty.
Yeah.
You never saw that before. We made fun of the communists for years because they didn't have any food in their grocery stores, and it was our grocery stores.
Yeah.
That's the inflation that we're looking at. And if you go to stores now, they're well stocked. Prices are beginning to come back down. That part of inflation, I think, the short term is starting to subside. So Powell's going to claim victory pretty soon and stop raising rates. Really, it just comes down to the fact that we now have food on our shelves and supplies that people can get to. Scarcity of goods is a key economic factor. I mean, if you don't have it, that the prices have to go up because that balances supply demand. We saw the same thing with lumber. People got the supply, the stimulus checks. They ran out and everybody did house repairs and fixed their garages, and all of a sudden the price of lumber went through the roof.
Right.
Well, no, we don't have a problem with supply of trees, but we had a very problem at that exact moment because everybody rushed out and bought at the same time, and
Right.
that created a short-term scarcity of goods, and that pushed prices higher, and that's why we saw that huge spike in inflation in those areas, and now it's coming back off. But they're going to claim, the raising the rates that they went ahead and they stopped inflation, they brought it back down. But really, all they did is they cost the American workers a lot of jobs, and it was simply because of the supply chain. Had we done a better job of just getting the ships unloaded and into the supply, we would have been just fine.
Absolutely. And what happens? You're saying soon that Powell will claim victory because the inflation numbers. What happens to gold and silver? What do you see happening to precious metal? Will they take a hit at first and then rally, or what do you see?
I think the way it's done it the last couple of times is we go down into the rate hike. I think we'll have one or two more rate hikes at the most. And what usually happens is we go down into the rate hike and then we rally fast out of it.
Right.
And I think we'll see the same thing. This time, only it'll be more pronounced because when we come out of it this time, people are going to look at it and say, okay, this might be the actual pause. And I would say one, maybe two more rate hikes at the most. Then we're going to get the actual pause. And when that happens, you're going to see gold and silver run, and you're going to see the dollar index roll over, and those things will go side by side. I might throw in the fact the price of oil probably also will run up right along with gold. I think as the dollar falls, oil will go up. The dollar index sitting today, it's sitting at 102.287. I still see this falling about 30% down into the 70 range.
Wow.
And if that's the case, just simply by the dollar rolling over like that, you're going to see the price of oil maybe at 120. As far as a tightening on the economy, they're going to do the Fed's work for them right there, because that's going to suck all the discretionary income you can get out of the economy, and it's going to slow. So next year you could definitely see the Fed pivot and actually start to cut rates rather than raising them this year. Along that way, I see gold rolling. I mean, we get back above 2,000. I think if we do that on strong volume, you're going to be at 2,400 to start with, and then I think then you go from there. We're heading into some dangerous times.
Oh yeah, absolutely.
I mean, you look at the banking system. We watched Silicon Valley go under, and they blamed it on their treasuries being upside down. Now, we knew that they were insolvent for months, and yet the stock price stayed up. And everyone said, well, whatever, it's not going to happen. And then all of a sudden, in a few days, bang, it was gone.
Yeah.
you look at the US dollar, same thing. I know a lot of people say, oh, it's the reserve currency. It's never going to fall 25, 30%. It might not fall farther than that ever. But those things happen all of a sudden. I was looking at some of these numbers. If you compare us to, everybody wants to compare us to Weimar Germany. But in the course of 1 year, it was just amazing. 1 ounce of gold in 1923 in Germany was 10,000 marks. By the end of the year, it was 1 trillion marks.
Yeah, that's insane.
It's unbelievable. In the United States, they say, hey, that can't happen. They can't happen. But you just saw it there. I mean, that was that wasn't a third world nation. That was one of the top nations in the world. And yet, in the course of 1 year, they printed themselves into oblivion. And then their currency went to zero and hard assets went up.
Well, you said in the beginning of the interview that people, they rush to groceries, and then that's what hurt the supply chain. What happens when people really lose faith in the US dollar? Like, let's say they pivot and the US dollar is getting crushed and people are getting scared and they rush to the banks. And then what happens when everyone does a bank run? If it happened in grocery stores, what happens to banks? Do you think more regional banks will blow up? Or
yeah, that's exactly what's going to happen. Borrowers are going to default, banks are going to go bankrupt, both sides are going to lose.
wow.
And that's the sad part of it. And the only way both sides won't lose is if the US government steps in and bails them out. But can you bail out the entire banking system? I mean, what are you going to do? Run your government debt up to 45, 50 trillion?
They will. They probably will.
Makes no sense whatsoever. I mean, I looked at some of these numbers of what we're doing debt wise. It's just amazing. In the last 207 years, it took 207 years for the United States to accumulate 1.3 trillion in debt. We did that in the last 8 weeks.
Yeah, that's insane.
Yeah, and then you sit there and someone says, "Oh, you're a conspiracy theorist, or you're gloom and doom because you say the dollar's going to go down to 70 instead of 102." But you sit there and you watch these guys spend, and now they've suspended the debt ceiling, until 2025. You're going to go into a presidential election next year. What are they going to do all year? They're going to spend money, and spend. They could care less about the American people. I'm absolutely convinced the government really doesn't care all that much about the people. They just view them as a vote. You see the people in our inner city, the government almost has a vested interest in keeping those people in poverty because they're in poverty. They're getting a check from the government. They're addicted to the government protects them. Why would you want those people to have upward mobility? If they do that, you might lose their vote.
Yeah, it makes sense.
It doesn't make any sense what we're doing to them. It's the worst form of entrapment you could ever have. The people in our inner city should be given upward mobility, and the only way to do that is it's just through education. But we're not pressing that. In the inner city, they push. Maybe 1% of those kids get out of there and get to go to the NBA or the NFL.
Yeah. No, it's modern day slavery.
But you look at some of the countries around the world that went the opposite direction. Look at India. 20 years ago, they stressed education. We kind of made fun of them. Kids were sitting there being forced to study, not go out and play. Parents were going to having, prayer sessions the night before to see, before the kids' finals because they wanted the kid to get into a good college. And look at them now. Yeah. Indians lead most of the technology companies around the world. Yeah. It's amazing what they have done in the last 20 to 30 years. And it's all based on education. And we need to get back to that here in the United States. We've got to turn kids out, especially in our inner cities. Those kids have got to come out and they've got to be strong, educated, and independent. They've got to learn sustainability. The saddest thing I ever saw the other night, I went into the store. I was on my way home, and it was near the lower income area of our town. And there was a little boy standing there panhandling, and he might have been 7 or 8 years old. And you knew he'd learned that. He saw it. And what those kids need to see, they need to see somebody who's working 16 hours a day, that work ethic that's teaching them that other way of life.
Yeah, you need financial education and hard work to be taught to the youth or else they'll just, it's crazy.
And during the lockdown, we did the opposite. We said, hey, stay home, watch Netflix, we'll get you a stimulus check. And people got used to that. Yeah. They've had a hard time just staffing restaurants for lunch sessions around here because they can't find people to work. Mm-hmm. That was never an issue. I mean, we're a college town. We've got 2 universities within 5 minutes of each other. We never had problems like that, but now they're having a hard time just finding employees.
Do you see any issues with like commercial or the commercial real estate sector, or do you see like when the Fed pivots, what happens to the commercial real estate? I know now that there's people are saying there's going to be north of like more than $1 trillion of interest just on the debt, just like the debt service on the 32 trillion.
Yeah,
Uh,
it's unbelievable.
yeah,
We're almost up to 1 trillion a year in debt service. That's 20% of US tax revenue just being spent on debt service.
Jesus.
We're heading for this moment. It's coming, and people don't see it yet, but you're going to come to a time where you're going to sell all US treasuries, and 100% of that money is going to go to debt service. Then you have to make tough changes. What do you do then? Bring troops home, cut services. And how do you, we talked about this last time. How do you cut services on people that have been raised on services? You've given that entitlement. You've given them a check every month. You've given them food every month. Now, how do you go and cut that? Because you haven't trained them to be sustainable. If our government actually cared about the people that live here, I mean, when you went to the store and saw empty shelves, and this year you don't have a garden in your backyard, well, you got to be crazy. Why wasn't the government preaching that all year? Hey, this year, everybody get out there.
Get your own food supply. Yeah, get your own food supply in your backyard. Every backyard. Boom, problem solved.
We have all these giveaway programs. Why in the world didn't we do that? Why didn't the city come in and say, hey, you know what? We're going to actually give you 10 tomato plants, 20 pepper plants, onions, peppers, lettuce, carrots. We're going to put shows on at the nurseries here in town that sell those supplies, where they're going to teach you how to can your goods, how to till the ground, how to put fertilizer in. They'll teach you all that for free, and that'll be part of our entitlement program.
Well, I don't think socialist governments want to be teaching people how to be self-sufficient, right?
That's the problem. They get you addicted to that. But the problem is, as the debt continues to go higher and higher, those entitlement programs become more at risk. And that's the part that's such a shame. There are certain people in our society that need those programs. I mean, if you were born with a disability, you need that program. You need disability insurance. That keeps you from being on the street. Mm-hmm. There are some people that maybe just mentally they're incapable. There's a percentage of your population that cannot work. You need to take care of those people. But it can't be the overall population. The overall population has to be given freedom to work. And that idea that the next generation of Americans are going to be better than this generation, that's what made this a great country. A steel worker could go in and work 16 hours a day and say to himself, hey, I'm going to do this, and it's just fine because my son's going to go to a good college. And when he gets out of here, he's going to be a white-collar worker. And maybe he could go and get a good job, and then he'd do the same thing. And he'd say, hey, maybe someday my son could actually own his own company. He'd be the CEO.
Right.
You have to have that upward mobility. But when you have a situation where a government is trying to do everything for the people, and they're going to do you cradle to grave, and they're just going to spend and spend and spend, sooner or later, those entitlement programs, they're going to bite the dust because you just cannot afford everything.
Yeah.
And when that happens, then society, is in big trouble.
Well, I bet the same thing happened in Rome back hundreds and hundreds of years ago. They were probably sitting around and talking about like, yo, you guys are spending too much money on military and all these government programs.
Could they ever have imagined that at this point, they're a tourist attraction?
Yeah.
The whole world came to them. They were the world leaders. And now we go to look at the ruins. It's ridiculous.
Yeah, it could happen in the U.S.
America, if we think that can't happen here, we're absolutely crazy. Right now, I mean, you look at what's happening. You got the 10-year note. It's at 4.195. Silicon Valley went bankrupt. The 10-year note, I think, was around 3.5. And they complained their treasuries were upside down at the time. And that's what put them under. How many banks right now at 4.195 are in the same exact boat, and we don't hear about it yet? Mm-hmm. Zion, Key, First National Bank, Bank of Hawaii. I mean, there's a whole list. I've got a list of probably 10 of them that very easily you could say, okay, throw a dart at it. In the next 2-3 months, they might come out with some big announcement. The PacWest, merger, I'm absolutely convinced that was a forced merger because they had big problems.
Yeah.
And it was a take under. The shareholders really got hammered on that thing. And you would never accept a deal like that in a million years if you were a shareholder, unless you had underlying issues inside of PacWest. I guarantee it, they had more problems there than anybody knows, and they're trying to cover it by putting these two banks together. And I got to give the Fed credit. I mean, to this point, they've held things together, and they're walking a real tightrope. But you can't do that forever. And even with the stock market, with a 10-year note at 4.195, there's a breaking point somewhere. I would say between 4 and 4.5%, you could see the S&P roll over fast and get like a 20% drop. If I was a trader, and I try to convince people not to trade that much, but I'd really be looking at as the 10-year note goes higher, get ready to go long gold, long oil, short the US dollar, and short the S&P and short the triple Qs. I think that would be a pretty nice trade going forward, because at some point, interest rates are going to get to the point where that becomes a competitor for stocks. If you can get 4.5% on a 10-year note and you say, I'm going to buy it, hold it to maturity, I'll get 4.5%, or I'm going to put it into a stock market that's run up this much because they pumped all this liquidity in the last couple of years. What happens if it rolls over and just does a normal 20, 30% correction? I mean, a bear market's 30%. We've had those pretty regularly. It's going to happen again.
Yeah, and all you need is one of these, like the four major banks in the US to have an issue, and their stock price or anything could happen, and then it is just it's a domino effect on the rest of them.
The crazy thing is, like Fitch has downgraded our credit rating.
Oh yeah, that's right.
And the first thing is Janet Yellen comes out and attacks Fitch. What happened to the fact that those rating agencies are supposed to be independent agencies? That's the whole idea. They're the watchdogs. Fitch, S&P, you're supposed to count on them. When they put a rating call, it means something. It's not the government just telling them what to do. Well, what did she expect was going to happen? I mean, she runs around the world begging for help. She runs to the Chinese and begs for help. Joe Biden ran to the Saudis begging for help for oil. Did they really look at those people and they think, hey, they care about what we're doing?
No.
I mean, they want us to live, for the most part, the Chinese, are our enemies. They don't want us to succeed. But the rest of the world probably just wants us to be sustainable, put a system in place that we can live on, and we're not running around begging people to buy our treasuries.
Or weapons. And
yeah. Well, I mean, what's our number one export?
Weapons, yeah.
I mean, that's the insane part about it. We used to make things here. I mean, look at Detroit.
Oh, yeah. Yeah.
We have given away the auto market. People don't know it yet. We have been taken. These electric vehicles that are coming, just these ridiculous go-karts they're going to build, silver, copper, lithium. They're going to need all those things. And who's got it? The Chinese.
Yeah, they have 60% of the world's something metals. Yeah.
They're going to own, I bet you they're going to own 72 to 75% of the market for autos. And they're going to turn around and say, okay, if you toe the line, we're going to give you this amount of minerals. So Ford, Chrysler, GM, if they want to build cars, okay, fine. You're going to, we'll give you this amount of the supply. Right. And that's the thing, that you're going to be all of a sudden held down by them. They're going to let you have your economy grow how they feel it should grow.
And they probably won't grow. They don't want it to grow. Yeah.
Right. Probably the same thing we did to them for decades. We held oil away from the Chinese because it slowed down their economic growth. Now they've got a pipeline. They're going to pump oil out of the Saudis. They're going to pump liquid natural gas out of the Middle East. They're going to have all the power they need without us being involved in it. Wow. We're making a huge mistake. I mean, we're running into a situation now. I mean, you look at where the price of oil is. If the dollar rolls over and our strategic reserves are empty, there's no way to stop the flow of oil, the price of oil from running up. And they've finally got us almost to a point where they've got us cornered economically, and we're headed for some problems. I think the next 12 months, people really need to hunker down. They need to buy hard assets. I just sent a friend of mine a note. I said, don't dare. He was thinking about selling property. I'm like, don't sell it. I'm like, hang on to it. I mean, land, especially land that has water rights. Hang on to that stuff. Get out of paper assets, hold hard assets.
Agreed.
That's the way to ride it out. And, we made fun of a lot of these people the last couple of years, the so-called preppers, but that people have to look at some of that stuff. What's wrong with putting in a food pantry in your house that has 6 months of food?
Oh yeah, everyone should have like food, water, a generator, everything just to sustain yourself. I totally agree.
People aren't being trained that way, though. A lot of us were raised. You remember the rule of three. You could survive 3 minutes without air, 3 days without water, 3 weeks without food.
Yeah, that's right.
The bizarre thing is when you have something go wrong, maybe there's a big storm coming in, everyone runs to Walmart, cleans out the shelves for food. and they don't really think about water. That's what will kill you. 3 days later, your water supply runs out. And that's the part you really have to be careful about. If you had a problem on your water supply, that would be a bigger issue than your food supply. We saw a problem with our food supply, and people survived. It wasn't easy, but people fought over the last couple pieces of chicken that were sitting there, whatever. But I don't think anybody starved. But if you had a problem on your water supply, people would die. And so I think that's the part we need to be really careful about, protecting our water supply. And I think that's one of the areas where, like the foreign hackers try to reach in and get a hold of your supply, where they maybe can damage it. Those are the things you got to be very careful of. But
absolutely.
for the most part, I think people just need to start looking at themselves in a more sustainable way and looking at their finances the same way. Gold, silver, platinum, you can hold that physically without any problems. It's harder to hold the bigger ones, uranium, fluorspar. It's almost impossible to hold some of those. But the gold and the silver, the platinum, there's no reason why you don't make that a key part of your holdings. If you like to trade stocks, I would say when you see the Fed begin to pivot, the junior miners are probably going to just absolutely skyrocket. And the way to think about that is think about the overall stock market. When we go through a tightening phase, and then all of a sudden the economy goes into recession, when the Fed begins to cut rates and pick the economy back up, the first groups that move are the microcaps, because they're the most nimble and they can move the fastest. And that'll be the same thing in the mining sector. So the junior miners will be the first ones that really take off. So if you wanted to be, a little safer, you'd buy like an index, like a GDXJ, something like that. But the junior miners should do very, very well.
Absolutely.
I look at quite a few of the junior miners. You have to weed through them if you're buying individual issues. I look for the ones that are doing a lot of drill tests.
Yeah,
I like people that do their homework. I like people that do their homework. I like companies that do their homework. There's companies like, up in Canada, Lorient, Goliath, Grizzly. Those are all companies I know for sure. They're spending a lot of money and time just doing drill testing, proving out their properties. And what will happen is once those properties are proved out, then somebody big will step in, like Sprott or Newmont or Barrick, and they'll buy that property and then take it into full development. But the key is doing your homework first. Take away all the fluff and just do drill tests, and then release those drill tests to the public and say, okay, this is what we've got.
Absolutely. We want to thank you so much, Thomas, for coming down to Wall Street Silver. It's been an incredible conversation. We talked about everything from silver, the Federal Reserve, and interest rates and what's happening in the future. So thank you so much for coming down to Wall Street Silver. And hopefully in the future, we can have you back on to discuss the market. Hopefully we'll see what happened with Powell, what he does next.
Well, thanks for having me on, and have a great weekend.
Awesome. Talk to you soon.